Welcome back for a weekend deep dive. My name is Justin, and this weekend we're going to try to figure out, is the S&P 500 and stock market going into a blow off top? Like I said, my name is Justin, and in this weekend's video, I'm going to try to explain why I think that we are actually going into a blow off top. What I'm noticing here is just that the previous pattern is showing us that every time we bounce off the blue line right now is the 50-day moving average, we bounce, 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 bounce. And I'm noticing a pattern here. I'm noticing that when we come into this period right here, we bounce and go flat, we bounce and go up, we bounce and go flat, and now it appears like we are bouncing and we are ready to go up. That's the easiest way to explain what I want to go through on this weekend's video. So if you're enjoying the stream at any time, I would really appreciate a thumbs up. And again, what I'm going to try to do this weekend is try to explain the video in the highest quality possible in the least amount of time. And I'm also even going to be providing bonus content, meaning what I would normally provide on the private stream that I do after. The reason why I'm doing that this weekend is to give a bit of a preview in terms of what you might miss if you were watching only the public video. And because I'm understanding that the content might not always be easiest for our members to find. So hopefully you will know what you get with your membership. Again, if you want to find more about that, again, click on the link in the description. But let's jump straight in. Let's go to our schedule and see what we have for today. We're going to be going through an S&P 500 summary. That is done. We've done it. We're going to go through the heat map and see what's been actually moving this last week. We're going to be looking through the options chain, the Bloomberg market and stock market news, economic calendar, ETF review, stock market moving news, and finish off with some charting. So where I want to start is going to be here. Looking at the heat map, what we can note is some pretty notable divergence here. Noticing that I said on the last weekend's video, I had a comment, probably dropped that same comment again on this weekend's video. I was asking, who do you think is going to lead the market higher? I said the A-team, right? Whoop, whoop. What I was talking about was Apple and Amazon. Well, what do we have here? 3.84, 3.83. It seems like there is some kind of a strategy here. Right, so again, just moving lockstep together. Very, very nice to see. Tesla catching a bid, which has been lagging year to date. And noticing that financials are largely down. We've noticed that Affirm announced a partnership with Amazon for this week where people can buy now, pay later. So we can see that some financial services are getting impacted by that. Some are more red than others, but PayPal is green. PayPal mentioned that they're looking to get into crypto trading and services in the US. Otherwise, I'm noticing that REITs are pretty bright green, and we got healthcare, which is also looking pretty nice. So what I'm going to do right now is actually jump straight into Slack and start showing you all of the most important data, which drives my weekly analysis. Again, you can find this information under SPX, which is everything S&P 500 and major ETFs. Let's go. First thing we're going to look at here is going to be the option clue. So again, on our show schedule, we showed you that we were going to go through that. The options for next week are telling us that Wednesday at 4:49 is notable. We're going to come back in about 2 minutes and find out the reason why that's important. We can also note here that we got, is it 452? 452 to 460 call spread, and we got 454 to 450 put spread. 452, yeah, perfect. So what I just want to point out here is just what's happening for next week. And the reason why I start with the options is because they generally just tell us motivation. And then what I try to do is do a work back to try to understand why that strike, why that date, and can we find any evidence to support why they would be going after that. Let's look here at Monday. So for Monday, we closed out at 453.08. It's pretty obvious why we didn't really go anywhere. At least for Monday, they wanted at 452.5. We'll see what open interest converts. We have some open interest put here for 453. Looking here to Wednesday, I'm noticing we got about 50,000 in volume at 449. We're going to circle back and talk about why that's important. Like I said, in about 2 minutes. No open interest. Wednesday is usually boring, so this is notable. And then looking out to Friday, what do we get? Well, we have open interest and not enough volume to actually be closing these out, which means that they're holding on to this spread into the 10th at 452 to 460. Also noticing that we got put continuation from 453 down to 450. What does that mean? Again, if these 449 puts are going to be paying out by Friday, we should be minting on Friday for these other puts. Shifting here to the September monthly, what we can notice that we got a 450-460 call spread, and the 460 volume increase from last weekend's converted to open interest. You can watch last weekend's video if you want to find out what it was. I'm just trying to be faster to go through the content in a timely manner so we get the most value. September 17th, we had 134 in open interest here. Now we got 116. Also noticing fresh fresh volume here, 30,000 at 460. This is now turning into a spread. It was not a spread even just a few weeks ago. The October monthly, there is nothing notable, no changes. We're noticing naked 450 call open interest. So we got 152,000 here. So to summarize this, because you might be getting confused, what all this means is that there's some of the market makers want it down into Wednesday, and then we don't know what's going to happen into Friday. There's still a pretty bullish call spread going up to 460. Looking up to September, bullish continuation. So if they're going to be minting up by Friday, the 10th here, these ones here going into the September 17th monthly expiry are going to be cashed up big time. All right, going to cash those babies up. What's also notable here is they lost almost half their value on Friday, right? Yeah, we went almost nowhere, but they lost almost half their value, right? Down by 28 cents, still only worth about 45. So there's equal bull and bear evidence is what I'm basically saying. Not a lot of continuation into October beyond the naked call. There's a lot of puts. We're going to ignore those for now. No notable flow on SPY this week either. What does that mean? It's boring. Sell in May and go away and come back on Labor Day. Well, Labor Day is next week. QQQ, very muted for next week. We're going to skip it. September monthly for QQQ, we got 380 call spread. And again, all that shows is that they also want QQQ up into monthly expiry. Not as big though. Jumping forward here and looking forward to the calendar of events, it's a quiet week. What I'm looking at now is, now that we know the dates of when we know that there's going to be, JOLTS jobs openings. I didn't miss that. So that might be another reason why we saw that put flow for Wednesday. And again, the reason why I'm looking at this is because now we know where the motivation is. Can we find anything to support a bull or bear thesis? All right, let's go. ECB on Thursday, that's the big day. We also have initial jobless claims, and then we got JOLTS jobs openings here. I think these numbers matter, but they're not really that meaningful. I think what the ECB says has a bigger potential to really move us. However, as we have a look here, ECB's tightening too soon risks big mistake. EU's Gentiloni says about an hour ago, right? So going into the week, and they're like, no, baby, we know taper. We print more. We go, brr. FOMC, September 21, 22. The reason why this matters is because of the seasonal chart and because the week data print that we got from last week, notably this one here, non-farm payroll on Friday, basically tells us that we're not there yet. And if we're not there yet, what are we likely going to do? We're likely not going to be tapering. So the September 21, 22 meeting is very important because there's an asterisk. The asterisk signifies that we are going to be providing a summary of economic projections. If that's the case, the last payroll number we're going to have for that September 21, 22 meeting is going to be this one here. Continuing here, what we also have is going to be the end of the quarter after the FOMC. So going into the end of the quarter, there's all the fun stuff that goes with that, notably a rebalancing from the major funds and then quad witching. The reason why this is particularly notable is because we're going to have FOMC, we're also going to have quarterly rebalancing, and then the first Friday of October, meaning going into Q4, we're going to get that we're going to get the payroll Friday number again. So that's where the market's going to have another chance to react to this. Again, looking at Bloomberg, what it says here is that traders weigh Fed timeline after week jobs report, markets wrap. So the market is now trying to forecast, when are we actually going to raise rates? Is it going to be November? Is it going to be December? As of right now, neutral in a bullish environment is actually quite bullish. I also forgot we want to show the Fear and Greed Index really fast here. Looking at about 9 minutes, doing pretty good on time. Fear and Greed Index tells us that we are actually neutral. What does that matter? Well, we are neutral at all-time highs, which I think means that people are just reluctant to put fresh money to work. Why? The market's up like 25% this year. We went through that on last weekend's video. The market's up like 20 to 25%. People are like, geez, that's like 2 years worth of gains. It's only September. So it's hard putting fresh money at work, notably when you are more concerned about not losing than making. So if you're late in your career, meaning you're going into retirement, it's really important that you don't lose what you have left. Why? People remember the last crashes. The second thing which is very important about this is that I think that the fact that we're not seeing people really go back to work in a meaningful way means one of two things. Either jobs are just not what people want. They don't want to go back to the old way of working, or it's hard to find a job. So The reason why that matters is because there's two ways to be financially independent. You can have income, or you can have a nest egg. So if you have your nest egg, but you have no income, it's very hard to go into the market, meaning the stock market, to put some risk on to try to make money. Why? If you make a mistake, your nest egg goes bye-bye and you don't have any income to replace it. However, if people start going back to work and we see that the numbers are getting a lot better, if you have the nest egg and the income, it's easier to feel secure by putting the money into the market. Finally here, the other thing I want to look at here was the $500 billion that Goldman Sachs forecasted was going to be coming into the market by the end of the year, by year end. So this was published in June. So June, July, August, we're now going into September. They were right. We're higher. Every month has been higher. So we got a big cash injection. And again, people are not fearful yet. So the greed has not been put on, which is why I largely believe we could be going into that blow off top. All right, circling back to Slack here. So now we know the events which could drive the potential here. So we know that if there's going to be a move, it's likely to be on Wednesday going into Thursday. These are the only data points which really matter. We know the Fed is paying attention to these. All right. And I think what the market's going to be doing is this. It's going to be weighing the JOLTS jobs number, the initial jobless claims, to try to forecast what the Fed is going to be saying at the September 21, 22 meeting. That's why it looks like there's optionality on the options chain. Looking here too, ETFs and indicators for this next week. I'm going to go through these fairly fast just because, again, looking at time, it's at about 11 minutes. I think this is one of my best videos yet. Let me know if you agree by smashing a thumbs up and dropping a comment. QQQ is clearly bullish. These are all weekly charts. What it means is that we're looking at a weekly perspective for the different sectors. QQQ or tech is bullish. XLF, again, we noted that on the heat map. It's coming back down. So if tech is up, we generally see financials down. That is being respected here. Looks like we have a W or a cup with a handle. It looks bullish. XLV using a bull pivot to actually pass its short-term uptrend. Looks fine, closing at a record. DIA, strong, right on its uptrend here. So I think DIA is going to start advancing if we're going to get the reopening trade really going back on a meaningful way. We have two variants now. So we heard from Fauci saying that the second one is not as bad. It's not really a short-term risk, but there's always potential, right? Headline risk is always there. Bullish and bearish headline risk. IWM appears to be forming a W, and it looks like it wants to actually go up here. Breaking and closing above 230 would start that confirmation. We've already pretty much kissed it. We have to get above it, right? It's only 1%. Can't rally 1%. How are we going to go higher? XLU looks quite good here. This is utility. So 1, 2 on the third test, it broke up. Oh my goodness. It's like it happens almost every time. Yep, almost every time on the third test. NYSE, right? Melting higher. Not really doing anything but melting. Notably more bullish than the Russell. VIX, closing up 2 cents. 2 cents for your thoughts. There you go. It's not doing anything. XAU, really bullish inverse head and shoulders here, right? That hammer was just basically a huge cuck move now, right? We've got an inverse head and shoulders. It looks nice. I'm not going to lie. This pattern looks really nice. The monthly one here looks almost even better. Why? Look at that pivot. Massive dragonfly doji, right? Like a hammer. Whoop! And then we got a bounce. Got a nice bounce right here off 1803. And this looks good, right? This is looking bullish. Looking here at crypto, this right here tells us that we're going into the last retracement level here, 61.8 on the Fibonacci retracement. If that happens and we blow through that, we're probably going to go back to all-time highs. Looking here really close, we can see that we have a pivot right here at roughly 51,000. So if we're able to get the 51,000 and close and push above that, notably on a daily and weekly closing basis, I think we're going back up to all-time highs. Again, if market's going to go into a blow-off top, we're likely going to see a risk appetite coming back to crypto. Finally here we got, what is this? This is the DXY index. So we had a cup, we had the handle. Now it just looks like a higher low, triple bottom kind of thing here. It's not really doing anything. It's been fading lower to support the SPY. So we just want to pay attention to that. If this reverses, it will add pressure to SPY. The DAX looks perfectly fine, right? We got a double uptrend here. Looks nice. It's bouncing. So the notable thing for me is that there's also a Friday apex here. On the Friday apex, we have the previous all-time high, and we're going to find out whether or not it holds. We also have higher lows holding here, and we're bouncing off the 50 DMA. DAX is not flashing any warnings. That is the most important thing. Finally, looking here at the rest of the stock market, global market, we can note that it's not as bad as it even was a little while ago, right? Nikkei is actually up 5%, right? Tokyo is up 5% basically. Hang Seng is only down by 1 now, right? Asia's flattening out, and I think that we saw Didi getting called in for, right, some slaps on the wrist on Friday, and nothing really happened to FXI or to Chinese stocks, so maybe we're finding a bottom here. If Asia's not really going to hurt us, good news can actually push us back up. Europe also just treading water, right? A little bit green, a little bit red in France, right? Those stupid French people. I'm French, right? So I'm allowed to say that. Looking over here to America, it's green. It's a matter of how green. We note that tech is pulling ahead. The reason why this matters is because tech, so just zooming in here, tech leads SPY. SPY is the market. So when tech is the strongest, it means that this is likely actually a sustainable rally. Right? We want what? We want gains, but we want the gains to hold because we want to realize the gains. All right, moving forward. I'm getting through a lot of content really fast here. All right, what do we got next? ETFs and indicators, that is done. So what I'm going to jump to now is actually going to be my SPY analysis, and then I'm going to provide my notes at the end here. So what we're going to look at now is a review of just the S&P 500. The reason why I'm looking at this is because it's a summary of all the rest of the notes. So if you're not going to watch anything else, this is the summary now. Everything else is supporting evidence. The heat map, the last 7 days, we can see that there is rotation coming back into tech, and notably the A team, Apple and Amazon. Why does that matter? Tech is leading SPY, right? Chips lead tech, tech leads SPY. And if crypto is going risk on, that's easier for the chips to rally. We can note that there hasn't really been much movement this last week, but again, if crypto is going to get above that 51K barrier on Bitcoin, we should see chips start to lead again, and tech is already ready to go. Notably the laggards from year to date. Apple, Amazon, Tesla have been the laggards year to date. So we're seeing exactly what I want for the warning signs for a blow off top. I would really like to see ARKK start participating in the rally for that to be meaningful, meaning Tesla pull ahead and ARKK follow suit. On the monthly chart, there's no major changes. I think we have a bull pivot off of 452. So if we don't put in the lower wick for the beginning of the month, I'm pretty confident we're going to be reversing by the end of the month. Why? Every month we've been able to push higher, we put in a lower wick. So if we're not going to be putting in a lower wick or pushing lower going into this Friday, we're likely going to be getting an upper wick, right? Potentially push up to 465, 460, 465, this upper uptrend here, right? The 423% extension. I think I have that identified here. 423 extension, and it also lands right here. So that's going to be roughly 456. Let me just go back to the notes here to make sure I'm not getting confused. So looking at the monthly here, I think that we are going to push. If we don't get a move lower into Friday, so it means that they're going for that 452, 460 call spread payout on Friday, it likely means to me that we're going to be pushing up into September 17th. The monthly OPEX at 460, that could be the short-term top. That could be the blow-off top and the short-term top, so that we fade back down into the FOMC and then potentially have our Santa Claus rally going into December. So if we don't put in a lower wick here on the monthly, I have a pretty strong suspicion that the lower wicks right here are not low enough, right? That one's a pretty that's a 10-point higher low. 10-point higher low, and now we got another 10-point higher low. That's not sustainable. We got to actually back test. That's what I think. So if we don't push down by Friday, as we look at the shorter term charts, we're in good territory here. Looking on the weekly chart, what we notice that we got a 459 upper uptrend, and we also have a 451 pivot and also a higher low. The reason why this matters is because we're not gonna start the move lower below 450 without a warning first. The warning's gonna basically be what I laid out here, pushing below 451, putting in a lower low on the weekly. I believe it's 450.79, which is the low right now. So falling back below 451 and confirming by a daily close below 450 is our confirmation we're probably going to start putting in a reversal monthly move. And there's the motivation for the Wednesday chain to show that if they want it down, they're probably going to go for it. The continuation happens here now. So on the daily, a reminder that the 423% Fibonacci extension lands on September 10th to 15th. So what I'm pointing out here is just this dotted line, which happens to meet this uptrend on about the 10th to 15th. It's roughly 456. Why does that matter? Well, how are we going to pay out the 460 call spread by Friday and by the 17th, which is on right the next Friday, if we're not at least here by the 10th to 15th? Oh, it's only 2 more points, right? How are we going to get the 460 if we can't get the 455? The second thing I would point out here, actually I think I have it laid out later. On the hourly chart, we're going to get a big warning on Tuesday at 11 a.m. as to whether or not we're going to pass the 452. And then in pre-market on Wednesday, we'll get the confirmation. Very similar to the setup we had this week by holding the weekly low and then advancing. So looking here on Tuesday, we got roughly 452 test at about 11 a.m. That is going into the European close on Tuesday. Europe's been dragging us a little bit going into this Friday. So how are they positioning ahead of their ECB meeting on Thursday? And are we above that 452? If we are, by about 11 o'clock, it means that we're likely going to be going bullish into the end of the week, pushing to this apex here into the 10th, right? 454, 455, if not higher. So we're going to get a really strong clue on here. And then the other note I would just put here is that the 449 put for Wednesday, meaning if we are below 452 and printing a lower weekly low below 451 and 450, what that likely means is that these guys really want to get paid. And the bulls are either not strong enough or don't have enough conviction to actually not pay those out. So that's our warning, bull or bear. It's only going to be on Tuesday, but it's going to be a very good predictor for Friday with a light data week. On the daily follow-up here, so what I've done now is actually revise the trend lines to show a better outline here. 447 apex on Wednesday. So if on Tuesday we're already getting a warning flash to us, what could happen into Wednesday is that we actually push down here to retest the previous all-time high, 447.11-ish. That would also technically be a higher low versus here. Low, low, higher low over here. That's why it really matters. So if we lose that 451 and 450, we're probably going to get a test to 447. And again, that would mean that these puts for Wednesday would get paid up, those 449s. I'm not going to circle back just for time, but that's what would happen. These are going to get paid up. They're going to get paid up pretty good. So the buy pockets that I'm identifying here, and again, this is the premium content. What I'm trying to show you here, and it's only been about 20 minutes, is the highest value content that we create. And so you understand that I'm trying to make sure that I'm packaging things up before the stream starts versus walking you through my process. I actually prefer this method, but I would be curious on your feedback. Drop me a comment, smash a thumbs up, and tell me, do you like the summary or cliff notes, or do you prefer the analysis where we go through and do everything? I prefer these ones here. We've been looking at the ES and SPX 500 USD charts for a while, so all this tells us here is that on these specific videos, we've been going back for a while and saying, is the stock market crash over? Well, with bullish patterns everywhere, it appears it is, at least for now. So we have to lose this uptrend here, right? Roughly 445. So again, that's the confirmation that if we're really bullish, we shouldn't be losing that level. Before we get to 445, we got to lose 450. So again, let's worry about one level of support at a time. Looking here at SPX 500 USD, this is the chart we started the stream with, started the video with. So again, I'll just go back to this one here because I changed the colors up so we can see that bounce flat, bounce up, bounce flat, bounce up. And I've done the math. I did it on last weekend's video. The math tells us that we should be up here if we match the velocity down and velocity up. So we've already matched the velocity down. If we get that same extension up here, we should be at 460. So again, everything's lining up here for 460. If we're not going to go to 460, the warning signs are going to come pretty fast. I also think that we're going into this part right here where we're actually going to start going up violently. So again, it's forming a base. What we're going to do off that base, I don't know, but I think it's going to be up. Again, more liquidity, more up. I don't know. All right, I think that covers off all of the S&P 500 notes here at about 25 minutes. That is actually very tight. All right, flipping back over here to my scorecard, what I want to go through now is actually going to be the summary. I forgot to do this at the beginning of the video. I apologize. So the weekly notes here basically tell us that, right? So there is still no alternative. So where do we put our money? In the stock market. Why? It only go up. We're likely going to drift higher like the previous 50 DMA tests on the SPX 500 chart that we just showed you. The Fed, we have the September monthly meeting, right? With jobless data. Yeah, so we talked about that, right? That's the September FOMC meeting with economic projections. We have that September monthly, so I'll just put the dates in here. I think people might just appreciate the extra day. September 17th, monthly, 450, 460 call spread. We have the Goldman Sachs 4,700 2021 target and 4,900 for 2022. We have another $1,000 contest. Want to know what that means? Again, join us on Slack for a 7-day free trial. We're willing to give you $1,000 for preparing to make money, right? We got 10 entries now. We're hoping we can get to 25 plus. We went through these last week again, just showing the under and out performance for individual sectors and ETFs. And then looking to here, the most notable events for this next week are Thursday. We have that Thursday ECB in initial jobless claims. There we go. We also have the JOLTS jobs, right? So on Tuesday, we have that 1 p.m. pass at roughly 452 on SPY. And then on Wednesday, we have 449 put on we have the 449 put for Wednesday on SPY. I want to make sure that converts on Monday morning though too. And then JOLTS jobs numbers. Finally, the most important thing, if you're not going to watch anything else, this is probably the best thing right here. It literally tells you how bullish or bearish I am for the week, and then the key levels of support and resistance. S1 means support 1, R1 means resistance 1, so on and so on. Support 2, support 3. There we go. So 451 is going to be weekly higher low. That is why it's the #1 level of support on a weekly perspective. 450 is going to be a psychological area, and then roughly, like it's like 447.07, 0.11, 0.25, whatever. 447 is support 3, the previous all-time high and our Wednesday daily apex. Now you should know what that Wednesday daily apex is. On the resistance side, we got 454.05, the current all-time high. We got 455, which is a psychological area, and the Friday daily apex, which begins on the 10th all the way through to the 15th. On 460, again, there's a big jump here, right? So 1 point, and then we got a 5-point jump. Why? We got weekly upper uptrend and Friday 460 call open interest, meaning if we're going to start doing the right sharp ascension, if we're going to start doing a sharp ascension, we could be at 460 by Friday. I think that's it. Buy pockets are right here. So when and if we do start falling down, again, 450 is going to be our warning to start trimming back to core positions. And then looking to buy back in tranche 1 and tranche 2. That's it. Thank you for watching. I'd appreciate your support. And make sure to drop me a comment. Thank you very much. I will see you on next weekend's video.